Good morning, trading world. It is August 8th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. What a bear market rally we are having. However, if you don't believe the upward momentum is fading, just look back to the jobs report on Friday. Let's go back on a 5-minute chart. All right, right here is where the jobs report hit. We went from 414.7 all the way down to 410.57 in a 5-minute candle. If that didn't wake you up from bull market bull, then check your pulse. The jobs report was just a warning shot, because this week we have CPI on Wednesday at 8:30 a.m. All last week I kept saying we're in bizarro world, where bad news is good because everyone's trying to get ahead of the Fed. They are hoping that with such bleak guidance, it could change the Fed's mind on such large rate hikes because the economy is weakening. But that jobs number wasn't weak. And boom, bizarro world strikes again. This time, good news is bad. The jobs number may have given the Fed enough ammunition to apply the same or even bigger rate hike on their next announcement. Also, all week I have been expecting the SPY to hit between 418 and 421, and that's where I would definitely feel comfortable about putting on some bearish swing trades outside of the VIX. We did not get there, however. We still have a large imbalance overhead that we didn't go get as well. So I feel like it's only a matter of time or until the CPI announcement before we hit the peak and start dropping downhill again. We should all know that CPI is going to be an extremely volatile event, but keep in mind that the market is a pricing model that likes to price things in ahead of time. So beware of buying the rumor and selling the news when it comes to CPI. Something else to think about in tracking the upward momentum: the latest to join the rally and giving strength to it will be the ones to watch for weakness first. And that would be Tesla, Apple, Microsoft. They also are on the verge of becoming really good short candidates as well. Will the third time be a charm at the 416 level for the breakthrough? It's actually better shown on a 4-hour chart. Alright, on the 4-hour chart we're looking at, you have one test of 416 pretty close to it right here, and then a rejection. We got another test of 416, then a rejection. And this morning we're getting back close to that 416 level. Will this be the time that we actually break through it? That's the question for the day. Alright, let's get to key levels to watch for today. Alright, here we are with the key levels of the day. Undoubtedly, we have at our jack resistance level 415 to that all-important 416 level today. That's our jack resistance level. Our queen resistance levels are 417 to the 418 area. And then king resistance is 419 to 421. On the support side, we have our jack support at 413 to 412. Queen support 411 to the 410 area. And then king support 409 to the 406 area. All right. The main thesis for today is bullish, closing above the 413.47 projected target high of between 416 and 421. The alternate thesis is bearish, closing below the 413.47 with a projected target low of between 412 and 406. The current major channel we are in is 397 up to that all-important 416. The next major channel up above is going to be from 416 to 425. Will the third test of 416 be the charm for the breakthrough? The chart order of importance is weekly, 4-hour, then the daily. Let's get to the scenarios of the day. All right. Our first scenario is going to be our trend day up. On our trend day up, we usually open with a gap up from the previous close, represented by the blue line. And when we get to the cash open, we usually start with a fade back toward that previous close. But we usually find support on or before that previous close. Then we begin our uptrend for the morning, better known as our golden window, the best time to trade. Then we reach or find our midday chop around either the possible queen or king resistance area. And we usually start the second half of the day with a head fake that looks to continue the main trend that we had before finding a small fade going into the close. That's our trend day up model. Also be aware, we've come so far up during the overnight session that this 416, 417 area could possibly be the top for the day. It is very possible. Alright, here we are with scenario number 2, which could be our rounded reversal day type structure, or I like to call it a range day because it's a combination of a range and trend day. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance before spending the same energy we use going up to come back down the second half of the day. Alright, also on our rounded reversal day, we have a vice versa warning, which could look like this. We could actually come down, get that continued push lower right out the cash open, find our midday chop either around the possible jack or queen support level, and then using the same energy we used in the beginning to come down, we could use that same energy to go back up the second half of the day. And that's how our vice versa scenario will look on the rounded reversal day type structure. A key thing to look for on on this rounded reversal day type structure is a divergence on your indicators pretty much after the 5-10 minutes after the close. You could start to see that divergence, just a very slight divergence. As price action either continues up, you look for your indicator to give you just the slightest divergence away from that price action. While price action is going up, you see the slightest divergence in your indicator going down. And it should be like that till midday, and then price action will start to reflect that divergence after midday. Alright, our last scenario is our expanded range day structure. We could look to set a decision area high boundary around the jack or queen resistance area, then chopping back down. It's possible that we get rejection at the 416 level again, or get a clean breakthrough toward the 418 to 421 area. So if we get that rejection, or it could possibly look something like this, where we chop back down toward our jack or queen support area, and then start a march or chop back up toward that 416 area. And then it is quite possible that we get the breakthrough of that 416 area and kind of stall around that area. So those are the scenarios that I'll be looking for to play out. Just gives me something, or visualization of what I'm looking for. I hope this helps. And again, as I believe the most important job as a trader is to protect the capital that you already have, and we do that by understanding and knowing our risk in each position that we take. And I'm going to close this out, as I do always, by wishing you a positive trading day. Hope you have a great one.